Are you considering investing in Dubai's booming real estate market, but can't decide between a ready apartment or an off-plan property? Let's break down the key differences to help you make the right choice. Dubai has become one of the most sought-after locations for property investments, offering luxurious apartments, high rental yields, and world-class amenities. But when it comes to choosing the right property, buyers are often faced with a crucial decision: ready apartment or off-plan. In Dubai, property investors typically have two options: either purchasing a ready apartment, which is completed and ready to move in, or opting for an off-plan property, which is still under construction. Each option comes with its own advantages and challenges, making it important for buyers to know which one aligns with their investment goals and lifestyle needs. So let's dive deeper into what sets these two investment options apart, starting with ready apartments. Ready apartments, as the name suggests, are fully completed properties that are ready for immediate occupancy. This means the building is constructed and all amenities are in place, so you can either move in or rent it out right away. The biggest advantage of ready apartments is that you don't have to wait for construction. The property is fully developed, giving you immediate access to a completed community, amenities like swimming pools and gyms, and surrounding infrastructure such as malls and schools. You can also personally inspect the property, ensuring it meets your expectations in terms of size, quality, and design. Pros of ready apartments. One of the major benefits is instant possession. Whether you're buying for personal use or for rental income, ready apartments allow you to take ownership right away, making them ideal for investors looking for quick returns. Another advantage is the ability to see exactly what you're getting before committing. Since the property is fully completed, you can tour the apartment, assess the quality, and even talk to current residents about the community experience. Cons of ready apartments. However, ready apartments typically come with a higher upfront cost compared to off-plan properties. This is because you're paying for a finished product in a developed area. Additionally, since these properties are already built, you won't have much room for customization. You're essentially buying what you see, with limited options to personalize the space. While ready apartments offer immediate possession, off-plan properties provide a different kind of opportunity for investors. Let's explore how they compare. Off-plan apartments are properties that are sold by developers before they are fully constructed, or sometimes even before construction begins. Investors essentially purchase the apartment based on architectural plans, 3D models, or show units. One of the key features of off-plan apartments is the opportunity to buy at a lower price compared to ready units. Since the property is still under development, developers often offer competitive prices and flexible payment plans to attract buyers. Another benefit is the chance to own a brand new apartment, often with modern designs, smart home technology, and the latest finishes. As developers continuously aim to meet market demand for contemporary living spaces. Pros of off-plan apartments. One of the biggest advantages of off-plan apartments is the lower initial price point. Developers often offer discounted rates during the early stages of a project, allowing investors to enter the market with a smaller capital outlay. Additionally, off-plan buyers enjoy flexible payment plans that are spread out over the construction period, making it easier for investors to manage their finances. Another pro is the potential for significant capital appreciation. As the project nears completion, property values typically rise, offering investors the opportunity to earn a healthy return on investment. Cons of off-plan apartments. While the financial advantages are clear, off-plan properties do come with certain risks. Delays in construction are a common issue, which could push back your move-in or rental timelines. Moreover, there's a level of uncertainty involved. Since you're purchasing based on plans, the final product may not always match your expectations in terms of size, quality, or layout. In some rare cases, there's also the risk of developer bankruptcy, which could leave the project incomplete. But in Dubai, the risk of a developer going bankrupt is minimized due to strict regulations in place by the government. The funds for off-plan projects are closely controlled through an escrow system, where the money is released to the developer in phases, based on the project's progress. This ensures that the budget is allocated properly and developers only access the funds when certain construction milestones are met. Additionally, if a developer does face financial difficulties or bankruptcy, The Dubai Real Estate Regulatory Authority steps in to safeguard investors. In such cases, the project is handed over to another developer to complete within the given timeline, ensuring that buyers' investments remain protected and the project is delivered as planned. While off-plan properties offer significant financial benefits, it's important to consider the full cost breakdown when comparing them to ready apartments. Let's take a look at how the costs differ in both cases. For ready apartments, the cost is typically higher up front. Since the property is fully completed, you'll be required to pay the total price or secure a mortgage right away. Additional costs include registration fees, which are generally 4% of the property price, and agency commissions if you are buying through a real estate agent. Other expenses include maintenance fees for the upkeep of the property and potential costs for renovations if the unit is not in brand new condition. Off-plan apartments typically come with a more flexible payment plan. Instead of paying the full price up front, developers offer payment schemes that are staggered over the construction period. You might start with a 10 to 20% down payment, followed by installments throughout the building process. Developers also often offer incentives, such as waived registration fees or reduced service charges for the first few years. However, as construction progresses, the price of off-plan units tends to increase. Investors who buy in the early stages benefit from lower prices, while those who purchase later may pay more. For ready apartments, you can start generating rental income immediately, which can offset your mortgage payments or provide a steady cash flow. This makes ready units ideal for investors looking for immediate returns. On the other hand, off-plan properties may require you to wait for completion before generating income, but they often appreciate in value during construction. If the market conditions are favorable, this can lead to substantial capital gains. For ready apartments, hidden costs can include unexpected maintenance or repair work, especially if the property is older. With off-plan apartments, risks like construction delays or developer issues can also impact your financial plan, particularly if you're relying on the property for future rental income or resale. For example, a ready apartment in Dubai Marina might cost 2 million AED up front, whereas an off-plan unit in the same area could start at 1.6 million AED with a 10% down payment, but you'll need to wait 2 years for it to be completed. When deciding between a ready apartment and an off-plan property, it's essential to consider what type of buyer you are. Whether you prioritize immediate returns or long-term growth, each option caters to different investment strategies and lifestyle needs. Ready apartments are perfect for buyers who are looking for immediate occupancy. If you want to move in right away or start generating rental income, a ready unit is the best option. This is especially true for investors who need to start earning returns quickly, as the property can be rented out as soon as the deal is closed. Additionally, buyers who value certainty and prefer a tangible asset over promises of future development will appreciate ready apartments. You can inspect the unit, get a clear idea of the community, and avoid the uncertainties that come with off-plan projects. Off-plan apartments, on the other hand, are ideal for investors who are focused on long-term appreciation. These buyers are often willing to wait for the property to be completed, knowing that they may benefit from significant price appreciation as the project and surrounding infrastructure develop. This option is also well-suited for those with flexible timelines. If you don't need immediate possession and are more focused on securing a good deal, off-plan properties often come with lower initial costs and payment plans spread over the construction period. Finally, off-plan apartments are attractive to individuals seeking more affordable options and looking to invest in the future potential of a growing area. These buyers are typically interested in emerging communities that promise high returns over time. In summary, ready apartments are great for those who prioritize immediate returns, certainty, and a stable asset. On the other hand, off-plan properties are perfect for investors with a long-term outlook, flexible timelines, and a desire to capitalize on future growth. Ultimately, the right choice depends on your investment goals, risk tolerance, and financial strategy. Now that you have a better understanding of the differences between ready and off-plan apartments, take a moment to assess your own goals. If you're still unsure, feel free to consult a NNY real estate expert to help you find the best investment option for you. Don't forget to like, comment, and subscribe for more real estate tips.